Hey guys, Darren here. Thanks for joining the Stock Options Market Weekly Update for the week of November 20th, 2023. We've got a great video for you here today. Thanks for your comments last week talking about the videos and what we've got on as far as positions. I took that to heart and I've really cut down and have fewer positions this week. So we're concentrating only on the very best. Keep your eye out for a SPX 0DTE option trading strategy video this week. We've got a good one for you. And with that, what we're going to talk about today is some of the economic data that came out last week, where we are year to date on the S&P 500, and we are going to then jump into the trades that we have on the Tasty Trade platform. I think it's super important that we understand the ways that the rich are getting richer. We want to use the same strategies that they're using so that we can trade profitably week after week and month after month. I promise we're going to dig into many detailed option trading tips and tricks. So please go ahead and hit that like button so we can get this video out to as many people as possible. And if you have not subscribed yet, do that now as well. Also, be sure and download the free options workshop in the link below. It talks about the benefits of trading options over buying stocks alone outright. Disclaimer, I'm not a financial planner. I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, let's see where we're at on the 5-day chart on TradingView. If we look last week, we closed the week on the 14th down at around the 44.15 level, and we ended up at 45.14. So about 100 points up for the week, and that's about a 2% increase in price on the S&P 500. So we are up around, let's see, year to date. If we look at the year to date, I like using these charts on TradingView, and they are free. But this is my long-term trend line going back to 2009, so we're a little bit above that. But we are up right now 15% year to date. We started the year at 38.24. And we're at 45.14 right now. Forward PEs are at 18.6 right now, so we are above that 10-year average of about 17.5. Last week, economic news you can see here. We had a strong week, up 2% for GDP in the first quarter. So we surged past economist predictions of a 1.4% increase. Initial jobless claims fell as well to 239,000 versus 265,000 expectation. And the housing market did show signs of slowing. Bank stocks, for the first time in a long time, really came up. So I did unload Bank of America, but we still are holding on to a position in Wells Fargo. So we'll cover that coming here. And it was up big, 4.5% last week. And Apple rose to its all-time high at the close of 189. And if we go and look at the interest rates, it's not until now, let's see, May. Actually, they pulled it in, but they're expecting the first cut in May, according to this CME FedWatch tool. And, it's going to stay up until May of next year, so almost the middle of next year. We're still expected to stay in the 5.25 to 5.5 inch percent range. But then in May, they are expecting a cut. So let's see, going into the FactSet Earnings Insight Report. Actually, let's start at page 1 here, and we can see year-over-year earnings growth of 4.3% in the for the quarter for Q3, so that is improving. And then again, the PE, the S&P 500, they've got at 18.6. And then if we go to, let's see, page 15 on this report, it talks about Q4, and they're projecting 2.9% earnings growth and revenue growth of 3.2%. So still pretty good. And then for the whole calendar year 2024, 11.6 earnings growth rate and revenue 5.4. And then the other page that I like to look at on this report is right here on page 33. the 12-month PE ratios, and you can see that energy, if you look at the dark blue line, that's the forward PE ratio right now, and it is at 10.4, so it's very low. I love the energy stocks right now. So we've got some ExxonMobil on as well, and it's kind of the best of the best. And then the 10-year average is 15.6, so it's at a discount right now. And then you can also see the forward PE of real estate versus the 5-year average of 19.4. So it's a fairly good deal, and real estate did well last week. Consumer discretionary did, well, let me see. Forward PE 24 versus 23. It's about where it should be. So that's about it. Let's see. So energy, real estate, utilities are also good, and consumer staples are actually undervalued just a little bit. Moving on to the different sectors on the 5-day, you can see everything was up last week, especially consumer discretionary and real estate, big. And if we look at year to date, we've still got communication services. So these XLC, this is those companies like Facebook and let's see if I pull it up here. Yeah, Meta, which is Facebook, Netflix, Google. So all these stocks have done really well so far this year, up 46%. Consumer discretionary is still real high at 29%. I was shorting that. I took it off. I can't believe it's still going up. I do expect that to move down. And technology is doing really well, up 46% year to date. So let's move on to the trades that we have on, and we will start with AMD. So what I'm doing now, as you see, I have trimmed my positions in this account. So I'm really just going to focus on the best of the best, and I'm going to look at the pricing where it was. So right here we've got 120 on AMD and the IV rank of 25. And the reason I like to look at IV rank is, or IVR, is because when we sell premium, which I like to do, is we want high IVR so that we can collect more premium. So if we look at AMD and we go to the trade tab, we go to the curve and analysis, we can see we're still in the middle of our iron condor. Oh, going back, besides the price and the IVR, I'm going to look at the short-term range. So I'm going to do the 1-month chart and 30-minute chart, one chart, you'll see. And then I'm going to look at the longer term, and the 5-year trend line and where we expect to be. And then we're going to look at how we've done so far this year. So I'm only keeping out of these positions. I'm going to focus on the ones where we've been successful and continue to be successful, and where I think I can be in the future. So I want to focus on the winners and keep those winning. So with AMD, we're in the middle of the range, as you can see. So we're still in good shape there with 27 days to go. So I like to look to roll at 15 to 20 day range. If we look at the chart, again, this is the 1-month and the 30-minute chart. So you can see right here, we're trading in a range since, this week. Actually, we broke down a little bit below it. Here's the 200-day and the 50-day moving average. But we did gap up. So for the month, there's a range of, from 94 up to 122. So it's had a big run up this month. But AMD is a great stock. They're an AI, big in AI. The chip stocks are doing real well right now, and it's got a strong balance sheet and income statement. If we look at the, I've got a $140 target. It's at 120 right now. So what I'm doing now is I'm looking, I'm going to go back 5 years, and I'm going to go to the weekly, and then we're going to look at the trend line that I drew, and you can see up at the 140, that's where I expect it to continue and shoot for. We're at 120 now. So I expect it to continue to increase, especially since the chip stocks are doing so well. I think AMD is a little bit undervalued. Boeing is another stock that I really like right now. We've got a 195, 185 put credit spread, and we're at 208. So we are positive right here. And if we look at the chart, you can see the trend line. I just went back to 2020, but I think the defense stocks, and Boeing's in commercial airlines, defense, and space. But I think they're great going forward. Good balance sheet. I've got a 225 target, and we are currently right now at 208. IVR is a little bit low, but I do like Boeing moving ahead. And we've done over the last 6 months pretty well in Boeing. If we look at the chart and we look at just 180 days, we are up almost $400 in Boeing. And AMD, going back, how much are we up? In AMD, we're up 493 over that same 6-month period of time. Chewy is another one that we've got on. Chewy, if we look at the price, it's 20. Okay, it's got a 92 IVR. That tells me earnings is probably coming up. And yep, earnings at 12.6. So today's the 18th, so it's in we've got a couple weeks until we've got earnings in Chewy. But if we look, that's the only stock here that has earnings coming up. But if we look at the trade page, we're right in the middle of that range, and we've got a strangle on, and we have done pretty well. Not fantastic, but hey, we've made a couple $100 in Chewy over the last year. And yeah, the chart does not look good for Chewy, but they have a great business, great fundamentals. I don't really take the long-term chart in to mind too much. I like to look at, with this company, it's a high growth, the 1 month, and when I go to the 1 month, I usually go to the 30-minute, and you can see the range that we've been trading in recently from 20 to 21 and a half, and then for the whole month we were down to 16.75, so it did shoot up quite a bit. So this is resistance, this is current support level, so I do look for it to trade within that range, and we'll see what happens with earnings after the bell on the 6th. We've got a couple weeks for that. Moving on, another big growth stock, and these growth stocks like Chewy and DraftKings should do well as the economy continues to recover. And as we saw from the expectations, it should. But it shot up above my short calls. It's at 38 now, low IV. But I have leaps options on that have done really well. So any down move next week, I'll close out these call options. Even though they're at a loss, my long positions moved up much more than the loss on this, $279. So if you look at DraftKings and 365 days over the last year, we've made $1,864. So we've been doing really well with these leaps options and turning them into poor man's covered calls. But we are at the top end of that range, so I want to see if they come back down, and when they do, then take the calls off, and then see if we break above that range and keep moving up. Humana is another one that is fairly a new trade, but I do like this one. We've made $118 since we started, just in the last, actually only 61. We're up 61. Okay. But we're at the 485 and we're at 498. So we are in the profit zone. As it moves up, we've got $125 left to make. We're at the 27-day DTE. But Humana, I've got a 580 target. It's at 498. So if we look at that short-term trend, you can see 500 to 525. It just broke down below that. But for the month, all the way down to the 472 range. So we've got support here. So we'll see if it keeps moving down. I don't think it will, because they've got $30 billion in cash, and that's probably why they're high, with interest rates dropping a little bit last week. But they're going to make money as interest rates stay high until May of next year would be the first cut. They're going to continue to do well, and I think it's a good stock to be in right now. If we look at that long-term 5-year chart and the trend, go to the weekly again here, and you can see it's just been solid, but it's been down a little bit lately. But I expect it to keep going back up to that 580 mark. All right, L3, 180, 170 put credit spread. It's at 185, so we are in that profit zone right now. I don't know why that's not popping up, but you can see we've made $313 just over the last 30 days. And with the chart down a little bit, but again, I've got a 240 long-term target on it. And then if we look at the monthly and the 30-minute, we are, let's see, we're trading within a range, but you can see what it's done. It's moved up over the last month, so that's why we've done pretty well in L3. And yeah, they're a big defense play, and they broke the 200-day moving average, so I expect them to do well. And just like L3, I'm not going to focus on LMT, Lockheed Martin, but very similar to L3. So you can see where we've got the put credit spread on, and we've done fine over the last 30 days, 130 bucks, but I expect it to do well as well. Palantir, we've got a leaps option and a call against it, and it broke through that call. So you can see we're positive as the stock moves up, and you can see the range, top end of the range right now. So I'm going to leave that call on and see if it pops back down, comes down from that 19 range. So I'm not going to do anything with it right now because we're right at that level. Long term on Palantir, what is my target? I think it's pretty fairly, it trades in that range from 19 down to 15. And so my target's only $20, but it's going to continue to do well, but it's going to stay and trade in that range, I believe, for some time. And if we look at how we've done in the last, 6 months, we made 471 bucks just trading these leaps and the calls against it. So we've done pretty well. SoFi is down, but I love this. I've got 300 shares and then 11 where I'm controlling another 1,100 with the leaps options. I don't sell calls against SoFi because it's such a low price stock. I just want the run to the upside. They're a small bank that can be a huge bank, and I think they're going to continue to do well, but we haven't done well to date, but I'm confident that we will over time. SQQ, as the market's been moving up, and since we're at 15% this year, I buy shares of this, which is the inverse short NASDAQ. So if you look at the chart, you can see it's down at lows. These are the 200 shares. My cost basis is $16.81. So whenever we have a drop in the market, this will shoot back up. This is just over the last month. It was all the way up to 23. But then at that point, as the market drops, I will still make money on SQQ because as these others are dropping, SQQ will move up. Same concept with trading 0DTE SPX. So watch out for the video this week. I've got that coming out. And you've seen in the past the way that I trade that, and we're up this year on SPX, but I don't have a position on right now because I did close out this Friday, so it's not showing. But SQQ, we will buy on big up days and accumulate shares when it's this low, below 17, and then sell when the market drops. TDOC is TeleDoc. I've got some deep in the money calls, so leaps options on TeleDoc. And with TeleDoc, it's a great long-term healthcare play, virtual healthcare, telehealth. They're signing more people up. I think it's a great concept that's going to continue to do well. For Q3, their operating income was up 8%. And again, they're expanding their membership base. We've made good money over the last year. I think we've made 350 bucks over the last year trading TDOC. And I think it's a great stock going forward. As far as the trading range over the last 30 days, it's been from 15.6 here up to 17.8 short term, but actually all the way down here to 15, and then all the way up to 19. So it does move a bit, but long term, I've got a $22 target, and we're at 17 right now on it. And Visa, the oldest, one of the oldest fintech stocks, super strong balance sheet, It's going to do good in higher interest rate environments. Just in the last 30 days, I think we've made a couple $100. We just started trading at $246 in the last 30 days in Visa, and I like, as long as we keep going up, we keep making money. And the chart, you can see we're at the top of the, move my resistance level up a little bit here, it looks like. Up to the 250, down to 246 for the short term in the last week. But we were down in the month down at 228, so we had a good move up. I think it's going to continue up. Again, my target is 260. If we look and how I came up with the 260, I kind of just look at the long-term 5-year and then go out to the week, make it weekly so we can look at 5-year, and you can see the trend line here, straight up, straight up, straight up. And 260 is where it should, be, and eventually it will be, but we're at 250 right now, so not a lot more room to move, but we're doing pretty well in it. Verizon, big dividend stock, so I own just the shares, and it's been increasing, and we collect a huge 8% dividend. So any downbeat, it hasn't had it since I started buying this, but I'll accumulate more shares in Visa. It's a $36 stock right now, and yeah, year to date, actually it won't show the stock, that's just showing options, but the stock has done really well. Yeah, we made over $300 year to date, and we haven't owned it very long. Wells Fargo, I've still got this bank stock, moved up big past my 42.5 call strike last week, and there's the chart. But long term, well, this is the long term. Wow, 5 years has been pretty flat. But if we look at that 1 month, let's take a look at that, and then we put it on the 30-minute here, and you can see it's moved up quite a bit. We're at kind of a resistance level right now, so we'll see what happens. That's why I will leave that call on at 42.5, because if this drops back down, that will be profitable. We'll continue to make money moving forward, and go from there. So ExxonMobil, I told you energy I really like. We're right in the middle of our 110, 105, or 110, 100, $10 wide put credit spread in ExxonMobil, and it's at 105 and 16 IVR. I think the trading range, well, you can see we make money. We're right at the break even right here, but it's been down just over the last month. But long-term trend, I've got a 128 target on the 5-year. So if we go again out to that 5-year, and then we go to the weekly, you can see the trend line on ExxonMobil just heading up, and we're down at this 104. So I really like it. I think energy, we're not energy independent with the current administration, so I think oil prices will continue to go higher, and when oil prices go higher, ExxonMobil prints money. So with that, if we take a look at what we've got coming out, I haven't even looked yet, but if we go to earnings and then all earnings, we can then look at all the earnings that are coming up, and we sort here by earnings, and you can see 11:20, so on Monday after the bell. Some of these companies, so Zoom is a big one. Zoom comes out with earnings Monday after the bell. Medtronic is another good company Tuesday before the open. We've got Lowe's next week, Dick's, Kohl's, so we've got some retail stocks. Wow, NVIDIA is next week as well. That's a big one for tech and the Qs. Should NVIDIA go up, probably all the tech stocks will go up. And if we look at this chart on NVIDIA, you can see it's just gone crazy. So we've got some earnings coming out next week, and those are the trades for the week. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Let me know what you thought of the video. Any comments that you have, I will reply, and I really appreciate them. Please remember to hit like and subscribe, and share the video with a friend. Check out the links to the coaching, the options trading course, as well as Tasty Trade. See you in the next one.